Hi there. Welcome to Trading Day. I'm Lindsay Biscaya. Let's get to some of the stories we're following for you in the BNN Bloomberg newsroom. The price of oil is surging as tanker traffic came to a stop through the Strait of Hormuz following the U.S. and Israeli attack on Iran. Now, the escalating conflict is threatening supplies in one of the world's key producing regions, with the strait handling as much as 20% of the world's oil shipments. U.S. President Donald Trump has said combat operations will continue until all U.S. objectives have been met. Canada has secured financial backing for 30 new critical minerals projects. Energy and Natural Resources Minister Tim Hodgkinson says the projects represent about $12.1 billion in new cash into the domestic mining sector and will strengthen supply chains, support growth, and reduce vulnerabilities. The new projects build upon deals revealed in October. Western allies have been seeking to find alternative supplies of rare earths to counter China's dominance in the field. And shares of Cameco Corporation are trading higher today. That's after the Canadian energy firm signed a $2.6 billion deal with India to supply the country with uranium. Cameco will supply 11,000 tons of the reactor fuel from 2027 right through to 2035. The agreement follows Prime Minister Mark Carney's visit to India and reflects a reset in bilateral ties. And we'll take a quick look at the markets now. The TSX is trading up at this point, up by 0.2% to start the day, still above 34,000. If we look at U.S. markets, an interesting reversal. The S&P 500 and the NASDAQ are now positive on the day, ever so slightly. The Dow Jones is trading down at the moment. The tensions in the Middle East are overshadowing much of the Prime Minister's ongoing trade trip overseas. Mark Carney met with leaders in Mumbai, working to find new markets for Canadian exports in India. And for more, we are going to turn to CTV's Rachel Ayala with the details. So, Rachel, let's start with what the two countries actually agreed to. What do we know?
Yeah, good afternoon. So this is really being framed broadly as a new partnership between Canada and India. The biggest piece of what the Prime Minister announced while there was the launch of talks towards a new comprehensive economic partnership agreement with India. That talks they hope to wrap up within the year. This would be working towards a new trade deal. But in addition to that, there were 5 memorandums of understanding signed, including on agriculture, artificial intelligence, and energy. And then, as you rightly pointing to off the top, 10 additional commercial agreements, all together totaling worth about $5.5 billion. The biggest one, of course, is that uranium deal, but there were other commercial agreements when it comes to pharmaceuticals. There was one with McCain's Potatoes, as well as coal. So those are really the focuses here for the federal government in terms of reshaping this relationship towards the economic benefits potential for both countries. The Prime Minister indicating, quote, "We are one family." So notable given this is the first time a Canadian Prime Minister has gone to India since 2018, clearly trying to work towards areas where the two countries can be economically and commercially aligned.
And obviously the issue of foreign interference continues to loom large, particularly between the two sides, right, with Canada and India. So what's the latest there?
Yeah, so heading into this trip, a senior government official indicated to reporters on Background that, the Prime Minister wouldn't be going to India if the Canadian government still had concerns that India was interfering, conducting foreign interference in Canada, which was a marked departure from CSIS, indicating not that long ago that India was one of the biggest proponents of foreign interference. So that raised a lot of eyebrows, sparked some outrage among Sikhs in Canada, as well as a few Liberal MPs. And so the Prime Minister has yet to face any questions on this. The Prime Minister's office canceled his only availability of this tour so far, but we did hear from Canada's Foreign Affairs Minister, Anita Anand, and here's what she had to say. Quote, "The words of the senior official are not words I personally would use." So an indication, at least, that there is some differentiation here between what Canadian government officials are saying and what's coming politically, but still a lot of questions left to be answered in terms of what does that actually mean? What does that look like? What is the current state of concern that Canada has with India when it comes to foreign interference, especially keeping in mind, as we just hit on, how more economically and commercially linked and aligned the two countries are seeming to want to become?
So interesting. Obviously, a lot of developments still to come. That's CTV's Rachel Ayala with the latest. Rachel, thanks for that.
Anytime.
Up next, oil is moving today, so we will look at the geopolitical tensions that are driving that move with Chad Morganlander, Senior Portfolio Manager at Washington Crossing Advisors. That's coming up right after the break. Oil surged the most in 4 years as tanker traffic halted through the Strait of Hormuz amid escalating conflict in the Middle East, threatening supplies, of course. Here to talk about this and the markets is Chad Morganlander, Senior Portfolio Manager at Washington Crossing Advisors. It's good to have you join us. Thanks so much.
Thanks for having me.
So the spike in oil and energy prices in general that we're seeing today, how long do you think we'll see this continue, or do you foresee more volatility, I guess, in the future?
Well, I think it's the latter. You're going to see a tremendous amount of volatility and uncertainty. There's no telling how long this conflict can go for. This may go for a month or so. With that said, the real question mark is what will the impact be on inflation trends globally and as well domestically, and as well what will the impact be on global growth expectations? And we don't see at this point in time a massive drag on global growth for the global economy.
Why is that?
Well, you would have to see an additional spike in oil prices, and the fuel costs would have to stay at that level for a longer period of time than a month or so. So our expectations for global growth is around 3.75% to 4.25%. U.S. growth around 2.75%. This may have some shorter-term implications on potential inflation trends in the short run. But again, like I started the conversation, there is a big question mark based off of severity and duration.
Okay, based on that kind of idea of what the economy could look like, does that change your outlook at all on credit spreads?
Well, credit spreads historically are tight. That to us is really a canary in the coal mine when it comes to the speculative fervor within the credit system, as well as within the stock market or equity market. So as credit spreads widen out, that will create a seam of opportunity to buy into companies, at a discount. But at this point in time, credit spreads are still super tight. We would be mindful of that and still stay on the sidelines.
We've also been watching, obviously, the price of gold it was up this morning, pairing gains at the moment. Is that something that you would expect amid all this really uncertainty that we're seeing unfolding over the weekend and into this week?
Yeah, that's a safe haven trade. A lot of short-term traders buy that as an inflation hedge, and as well as almost like an insurance policy. Gold has gone a bit higher. At the same time, you've seen the long end of the yield curve spike higher by 10 or 15, 12 basis points here in the United States. So these shorter-term knee-jerk reactions are kind of playing out the way that I would expect. But this is all, we're only about 2 days into it, and like you mentioned, credit spreads as they widen out, then the financial system could become a little bit more volatile.
Okay, so we've got a stock hold and a stock drop. We'll go through them both. We'll start with your stock hold. What is it? It's IBM, I believe. And why is that your stock hold?
Okay, so we like IBM. We own it in our rising dividend portfolio. There is a expectation of growth of between 5% and 6%. So we're not talking about a company that needs to have explosive growth on the upside to justify its valuation. We believe that there are 3 tailwinds that we think will continue over the next 3 to 5 years. One is their software side of their business, which is roughly about 40 to 45% of their revenues, will be growing, we believe, in double-digit territory. And it is and complements the AI infrastructure build out overall. Second engine of growth, we believe to be on the mainframe side of the business. This long legacy business that was this low growth business, actually we think can have some get up and go and surprise investors over the long run as corporations have to battle the decision to go on-prem or off-prem or be hybrid with a hybrid cloud. We believe there will be many more corporations doing that hybrid cloud decision based off of cost, functionality, and security. And then third component of it, which is actually a drag on valuation at this point, we think it'll get revalued, is the consulting side of the business. U.S. corporations and global corporations will need to hire outside consultants that will have a core competency in how to use artificial intelligence in their line of business to gain productivity. We think that these three divisions over the course of the next 3 to 5 years will be humming. So we see this as a growing, profitable, well-capitalized company with a rising dividend thematic.
On the flip side, stock drop. I'm not sure if you have a particular stock or just kind of a sector you think investors should be shying away from right now.
Yeah, like this is one of these things that I would duck from. So there's a tremendous amount of euphoria and excitement when it comes to data center build out. That could be on the neo cloud side or whatever have you, at the terms that they want to use. And the reality is that these infrastructure spending cycles go in a cycle of boom to bust. And we're estimating that there will be roughly about $4 trillion in the next 5 to 6 years of data center build out. The reality, though, is that there has to be a return on invested capital. They're leveraging themselves to achieve these build outs in regard to their assets that they're buying, either it be chips from the various chip providers. They do have a finite life to them. This is very different than the internet build out of fiber optics. When they built out fiber optics, they put it into the ground. It had a 100-year shelf life. These data centers don't have that type of shelf life to generate the revenues that are needed. Now, when the cost of compute is elevated right now, we believe that will fall dramatically over time, as history has showed that through technology and the evolution of technology, that happens, and it's really a high probability.
Okay.
So we would avoid that build out.
Okay, Chad Morgan-Lenders, Senior Portfolio Manager at Washington Crossing Advisors. Appreciate your time. Thank you.
Thank you for having me.
Coming up, as nuclear investment accelerates and the company builds on a record backlog, the CEO of Atkins Réalis joins us to lay out what's driving its next phase of growth. Atkins Réalis beat estimates on revenue and set a record high backlog in its fourth quarter. With demand accelerating across infrastructure and energy projects, investors are watching closely to see how the company advances its strategy in the months ahead. So for more, we are joined by Ian Edwards, President and CEO at Atkins Réalis. It's good to have you join us. Thanks so much.
Yeah. Thanks for having me back. Thank you.
Yeah, before we get into some of these results, I just want to ask, because as I understand it, correct me if I'm wrong, you do still have operations in the Middle East. So as we're watching everything unfold over there, have your operations been disrupted at all?
Yeah, I mean, well, obviously our concern is going for all the people of the Middle East, and particularly our own people, which are based in the Middle East. Our operations are not what they used to be. We were in the oil and gas space years ago. We divested that in 21. But we do have people in Saudi Arabia, and we do have people in the United Arab Emirates. Pretty much business as usual in Saudi Arabia, but all of our people in the Emirates are working from home. And we've obviously stopped travel and the like on the recommendations of our governments and governments around the world. So it's a tense time for our employees. I spoke to them earlier today, but business is pretty much progressing as usual.
Okay, so let's get to some of the results from this fourth quarter. I just wanted to ask that to start. But latest results showing strong momentum. What is driving most of this growth, do you think?
Yeah, I mean, we've got two halves, really, of our business, if you like. We have a general global engineering business, which operates in the infrastructure space, such as transport, water, non-nuclear power, and buildings and places. And we have a nuclear business, which is the proud deployer of the CANDU nuclear technology, which is one of only a few technologies currently readily available for nuclear power generation. And the way that we see our business now is that with these two areas of the business, they complement each other in a very, very differentiated way. And the capacity that we have globally in our 41,000 professional people around the world and our technology from nuclear really enables us to offer customers the power that they need to fuel the super cycle, if you like, in energy, particularly electrical energy. And I was listening to your previous speaker talk about AI and data centers and the need for those, but it's power which is really needed for those data centers to get powered up in the future that we see ahead of us. So those are really big drivers of the great 2025 that we had, which has set us up really well for 2026.
Yeah, and in your latest report, you talk about organic growth between 5 to 7%. How do you see that evolving? Is that kind of on the heels of what you were just mentioning?
Well, that's in the engineering services business. Nuclear, we would expect to overperform that by quite a long way. Last year, we had phenomenal growth in the nuclear sector of 50%, which was a very unusual year, taking us to new sort of record level revenues. But yeah, we're feeling good and confident about the engineering services range of 5 to 7. We're seeing good pipeline of opportunities. We had a very good Q4 showing kind of strength in the markets as we go forward. So yeah, all in all, pretty confident for 26.
And backlog has become a big part of the Atkins Réalis story, right? So how much confidence does that give you in the rest of the year? And what are you doing to kind of relieve some of that?
Yeah, so we always see backlog as a forward-looking indicator because obviously that's the amount of work we have on hand, and it's a great indicator of the revenues you're going to see in the quarters to come. There is a bit of a cyclical nature to our business. It builds generally towards the end of the year rather than the beginning, but backlog at record high closing out 2025 is a really good place to be for 26. So again, you know, giving us confidence in the market and particularly our own special differentiation in that market.
You touched on this about nuclear energy, right? And how that's becoming kind of like the centralized conversation around energy security. What areas, I guess, are you looking to grow into when it comes to the nuclear energy space this year?
Yeah, that's a great question. I mean, we have our own technology in the CANDU, and the CANDU is the indigenous Canadian technology developed over 7 decades, and it's a really special technology. It uses natural uranium. It produces medical isotopes. It's very, very reliable. It's very efficient. We've updated all of the designs to the latest safety and technologies available. And it's in demand. I mean, I've been around the world in 2025 selling the product, and there's a high degree of interest, as well as obviously domestically, where Canada has a very strong nuclear program and a very strong commitment in many of the provinces, and particularly Ontario. So that's a great thing. But we also support other technologies. We've decided not to develop our own SMR product. We support the SMR here in Ontario that's being built by Geopolitical, and we also support other technologies around the world, such as Rolls-Royce and TerraPower and EDF, the French technology. So the two things together have given us this almost exponential growth in the last 18 months. And we're at these sort of new levels of revenues, but we see a really sustainable future in those revenues, and even building on that as we see new builds come through.
Mm-hmm. And just lastly, before we wrap up, any headwinds that you're looking at for the year ahead? I know you mentioned your earnings reporting call. There's some headwinds in the U.S. Can you elaborate on that?
Well, we saw some headwinds at the beginning of the year. I think we don't do a lot of work for the federal government, where most of our work is state to state. And we saw some sort of lack of confidence headwinds, I think, from some of the states as to whether they wanted to go into capital programs. Those got better through the year, and as I said, had a really good Q4. I think the other headwind that we experienced in 25 was some reprioritization in Saudi Arabia as they really focused in on Riyadh and the Expo and the World Cup. But again, we're through that. And as I said earlier, pretty confident in our outlook and the way we've pitched that range going into 2026 now. So, yeah.
Okay, we will leave it there. Ian Edwards, President
Thank
and
you.
CEO at Atkins Réalis. Appreciate your time. Thanks so much for joining us.
Thank you very much.
Still ahead, we will hear from Rachel Bartholomew, CEO and founder of Femtech Canada. That's the country's first national network dedicated to advancing women's health. Stay with us.
To be involved in clinical trials. And so that means that we have 30 plus years of fundamental research into products that just has never existed before.
And when you think about, Rachel, just the opportunities and the gaps that exist in the Canadian healthcare system, what are some acute ones in your mind that really stick out?
Yeah, so we in women's health in general, a lot of the focus has been on what we call bikini medicine. And so breast health, gynecological health, menstrual health, fertility, these are all the things that have largely gotten focus. But as we have developed through research, what we found is women experience heart attacks differently. Women experience autoimmune situations differently. And so there's a number of different conditions that really disproportionately and differently affect women. And so heart health, autoimmune health, we're looking at things like cancers that affect differently. So there's a number of different opportunities for innovations to come into these areas.
And now you started this, you launched in 2024, and it's now the third largest in the world. Is that have you grown that well, or is it that there's a space that needs to be filled here and people are finding you?
Yeah, there's a space to be filled for sure. So when we started, there was about 51 women's health companies across Canada, and now we're over 200 companies across Canada and counting. And that is simply just because as the awareness starts to grow around Femtech and that the community exists for these businesses and these innovations to have camaraderie and to share their qualms and quarrels, it's really helped build that industry into now what the government's calling one of the largest and fastest growing sectors in Canada.
Rachel, do you see part of what Femtech offers is the ability for financing, venture capital, and building those types of networks? Or is it a Y Combinator for women's health-focused enterprises?
Not quite a Y Combinator. We are very much focused on a larger kind of federal initiative here. So it's all about as much advocacy, as much as it is about educating investors on the potential for women's health. I'll give you some stats. So about 12% of our companies have raised funding, and only about 4% of them have raised institutional funding. And yet our companies in the Femtech Canada ecosystem have contributed to about 1,200 plus jobs on the Canadian market. And so even though venture capital has been slow to adopt, partially because of the lack of attention that has been given, partially due to the need to have a term, aka Femtech, to put on these companies, what we've seen is these companies being able to be scrappy, be able to create jobs, create IP, create all the things that the government wants to see in order to create this ecosystem, and venture capital slowly starting to come on board now that we're having exits in companies like, Maven and Flow being a big unicorn status company. And so we're starting to get there, but there's still a little bit more time that's needed in order for us to get more venture capital interest.
I was going to ask you, how are the returns on these? Are people seeing a good return on their investment in them?
100%. But like I said, we need that time in order to be able to get companies to the level. We just haven't had enough time with the brand Femtech in order to see those exits and to see those unicorn status companies growing. But there was just an exit report that was released this year at JPM, so JP Morgan's healthcare conference. And so the data is slowly starting to be developed, which is another big pillar of trying to track these things appropriately.
And what's government think of this? Where's the government right now?
It's an interesting question. And so I was actually just in Ottawa this past week. We are trying to push a bill through called S243, and it's essentially a framework for women's health. Canada has not updated its women's health strategy since 1999 here in Canada. And it's something that got shelved and it never got attention after that. And so we're very behind. I think we're the 5th lowest developed country in the world without a women's health strategy. And so we've been pushing them. We've been lobbying and advocating on behalf of women for about 2.5 years. We're starting to see the recognition, but we're hoping that that turns into deployment for things like primary care, for research, for innovation, and for an investment fund that we can put towards women's health.
That is Rachel Bartholomew, CEO and founder of Femtech Canada. Coming up, we will head back to PDAC to talk about the intersection of critical minerals and small modular reactors. That's next. Stay with us. Okay, we are going back to Andrew Bell at the PDAC Mineral Exploration and Mining Convention. And along with mining, a big theme this year is Canada's energy security. And as small modular reactors are becoming a bigger part of that strategy, Andy has caught up with a key voice in that space. Right, Andy? Tell us more.
Lindsay, thanks very much indeed. I'm here with Irvina Gosalsi, who is the CEO and founder of the Canadian Small Modular Reactors Association. Thanks very much for joining us.
Thank you for having me.
I guess just to jump right in, one question here is, what will these things run on? Because they typically need enriched uranium, and we don't have a source for that in Canada.
Yeah, so actually in Canada, we have uranium, and we have tons of uranium, and we do uranium mining.
Yes.
And also we do conversion. So now it's about time how Canada can advance ahead and do the enrichment. Mm-hmm. So right now we are getting the enriched fuel, few countries are doing that.
Yeah.
So I think it's about time that Canada actually moves forward, because this is a first mover's advantage. Mm-hmm. And we want to make sure that we don't have only the advantage in technology or on the supply, but we have to have advantage on the supply chain. So I think now it's about time that we bring that conversation ahead on the enrichment.
But we're already talking about tens of billions of dollars to build these SMRs in Ontario at Darlington. That's going to be more expense, creating a rich uranium supply. I guess my question is, could we not have gone with a CANDU technology scaled down that would have just used plain uranium?
So in Canada, and in the world as well, we see the need for electrification, and the need for electricity is increasing. Mm-hmm. So we need all types of electricity providers. We need all types of nuclear. And SMRs can be used for different end users, and especially because we are here at the mining conference, mm-hmm. they can be used also for mining exploration. Of course, the first SMRs will come with a price tag. Mm-hmm. But if we were to go with a fleet approach, the cost will go, the curve will go down. So we, as previously said, we have the capacity, we have the uranium, so we have the supply chain, and we have all the know-how. So I think by doing as a fleet approach, we'll be able to bring that cost down in Canada.
I'm kind of harping on this, but we're going to be, at least in Darlington, using a foreign technology. So it's the intellectual property won't belong to Canadians.
When we talk about the technology, that's something different, but we also have the supply chain, because the entire process is not only about the technology.
It's also reactor.
So there's a supply chain as well. So the entire workforce actually comes from Canada, comes from Ontario. So we have the technology GE Hitachi, but we have the supply chain which is based in Ontario. So I think it's more than a technology conversation, it's a conversation about the entire process itself.
And just remind us, New Brunswick, Saskatchewan, Alberta, they're exploring the idea right now.
Yeah, that's right. So right now, recently we had an announcement also from the government of Saskatchewan. They are now working on producing medical isotopes, which is very beneficial because medical isotopes save life. They help not only to diagnose cancer, but also treat cancer. We have government of Alberta, which now is going through the engagement process with different stakeholders across the public. They're going through different places in Alberta to explore the sentiment of public about the nuclear. And the fact that lots of stakeholders are being part of this conversation, and even I myself had the chance to attend some of those, I think there is a sentiment within Alberta, and I think that the fact that the Alberta government signed an MOU with government of Canada and nuclear as part of that conversation, I think that the conversation will go forward. The same with other provinces like New Brunswick, so they are also working on the nuclear conversation right now.
These things are not always that small, are they? Some of them will provide power for 300,000 homes.
Yeah, so SMRs have different end users, so starting from mining, but they can use also for industrial purposes, but also for district heating, and also for remote communities. We can go with microreactors. So the power that they do is different from the type of the end users, but I think that now one of the conversation that we're hearing more recently in Canada is about data centers, and they need lots of power. So SMRs can be one of the solutions to provide this reliable power because data centers cannot afford to lose even a second of power. So SMRs are 90% working all the time and they're a reliable form of providing electricity.
We should remember that only Russia and China have got one going right now, and the one in Chalk River, Ontario is dead in the water. So it's going to be a long time before we see these things in operation.
Yeah, even in geopolitical perspective, I think that that's why we should take that first mover's advantage. You mentioned China and Russia. Russia, for example, has a floating SMRs now in Arctic. So one of the ways that we also can use the SMRs and microreactors is also for powering the remote communities and defense purposes. When I say defense purposes, I'm not saying about nuclear weapons. I'm saying like for building those communities and defense in remote communities. So I think that we should take that advantage that we have everything else, but we just need to go ahead with building those SMRs.
And tell us about yourself. So your background is in law. You have an academic background there, and you were doing a PhD, I believe, at Carleton.
Yes.
And you became interested in infrastructure, and particular nuclear.
That's right. Yeah, at the time I was doing my PhD, I was introduced to the program, which is a joint program between the Department of Norman Patterson at the Carleton University and the engineering faculty. So this is a program that is sponsored by different governmental departments to train the future leaders in critical infrastructure. My focus was on nuclear and SMR specifically. And at the time, by doing this conversation with different stakeholders, seeing the regulatory perspective, seeing the technology, seeing the supply chain, I thought that there is a need in Canadian market, a voice, a platform for having over different supply chain, going from technology, but also workforce and public education about SMRs, to have a unique platform and bring all those people together and have those conversations going on.
And you founded the Small Modular Reactors Association.
That's right.
You're a bit of a mover and shaker then, yeah.
I hope so.
Yeah. So what's next up? Obviously, Ontario, Darlington. I mean, the world is watching to see how that goes.
Absolutely. Yeah. You mentioned Ontario, and Ontario is a success story not only in Canada and the world. I have the chance sometimes to be on international platforms, and lots of countries are looking at Ontario. So we're about to be the first country in G7 to have the first SMR, like commercial SMR. And I think that what's happening next is that also other provinces have signed MOU with Ontario to take that know-how and see how that we can use this know-how for deploying SMRs also in other provinces. So I think next is that hopefully we're looking now at Saskatchewan for technology selection. We're looking in Alberta to see how SMRs and nuclear can be viable. So I'm here to talk about SMRs, but I'm pro-nuclear. I think that we need all type of nuclear technologies in Canada. And I think that next one, and what we're trying to lobby a lot, is about Arctic and remote areas. So how we can revive those communities so we can no longer depend on weather, like bringing over and like supplies in the Arctic. We have to revive the indigenous communities because indigenous communities are a very important factor for deploying the SMR and microreactors. So if you were to bring the microreactors, deploy microreactors in Arctic areas, we'll have the opportunity also to build a workforce there and have more economic opportunities for indigenous communities to build their own factories and have their workforce and basically make them more viable.
Arvina, thank you very much.
I appreciate, thank you so much once again.
Arvina Galassi is the CEO and founder of the Canadian Small Modular Reactors Association. It's BNN Bloomberg live from PDAC, the world's #1 mining show. Back to you, Lindsay.
Such an interesting conversation, Andy. Thanks for that. Well, coming up, oil is moving today, of course. We'll look at the geopolitical tensions driving that move right after the break. Stay with us. U.S. President Donald Trump announced an attack on Iran over the weekend, moving oil prices, of course. And here to talk about the U.S., Israel, and Iran geopolitical tensions that's driving oil prices right now is Akash Maharaj Fellow at the Munk School of Global Affairs and Public Policy at the University of Toronto. It's good to have you join us. Thanks so much.
Thank you.
So I guess for our viewers, let's backtrack a little bit. Obviously, tensions have been building for weeks here, or arguably years here. When it comes to the geopolitical tensions and what's been building before what we saw this weekend, can you kind of walk us through the key points?
In some ways, although tensions have been, as you say, have been building for years, this attack is somewhat something of a surprise because there have been ongoing negotiations mediated by Oman. And recent announcements by Oman, as recently as the 26th of February, was that those negotiations were making progress. The government of Iran had, for example, promised zero stockpiling of enriched uranium, which Oman said put them on the verge of what it described as an amicable and peaceful resolution of the dispute between the United States and Iran. Nevertheless, not long afterwards, President Trump authorized the bombing of the country. It's difficult to say whether the Trump administration was negotiating in good faith or bad faith, whether they simply disbelieved the new commitments made by the government of Iran, or in the alternative, from a cynical perspective, whether they accelerated the bombing campaign because they did not want the negotiations to succeed.
An interesting point. And as we talk about these negotiations, right, like they are around nuclear weapons. How much of the negotiations and the intent here is on nuclear weapons, and how much is maybe based on oil, if any, of that intent?
Both play a factor. The legal basis of this bombing is that Iran posed a clear and present threat to its neighbors, to Israel and to the United States because of their nuclear program. And to be clear, Iran does have a long history of dissembling, making false promises and promises it would not keep. So, for example, it had at one point agreed to limit uranium enrichment to about 3.6%, which is what would be reasonable for civilian use in reactors. It had reached enrichment of as high as 60%, so more than 10 times that level. They have been an untrustworthy negotiating partner on the nuclear front. Having said that, on the other hand, Tulsi Gabbard, Trump's director of national intelligence, told the U.S. Congress that Iran was in fact not building a nuclear bomb and was not preparing any attacks on the United States. The negotiating situation over nuclear weapons has been fraught with dishonesty, dissembling, and uncertainty. On the oil side, there's no denying that oil is playing a factor here. About 1/5 of all the oil in the world is transported through the Straits of Hormuz. And that was becoming increasingly unnavigable as a result of tensions between the United States and Israel on one hand and Iran on the other. This will have the effect of not only pushing oil prices up, but threatening the economies of some Gulf states, which are strong allies of the United States. Finally, Iran has had a policy of excluding foreign investment, foreign ownership, I should say, of its oil fields. And there's no denying that many American oil companies have coveted the opportunity to not only be contractors in Iran, but to have an equity stake in its oil fields. Those companies are probably watching very carefully to see whether this bombing campaign will open up the possibility of profits for them after the dust is settled.
So you say you were a bit surprised, or there was some surprise in terms of what happened over the weekend and this bombing campaign, as you call it, which now seems to be ongoing. Were you surprised by some of the international response to this, particularly Canada's response?
I was. I was not surprised that democracies around the world, including Canada, were quick to condemn the Iranian government for its human rights abuses. Those abuses are severe, and no one should be in any doubt that the government of Iran under the Ayatollahs is a brutal dictatorship which has no support of its own population. It maintains itself in power by dint of repression and wholesale slaughter. Recently, there have been a series of protests by Iranians against the regime and in favor of democracy. The regime responded by killing somewhere between 7,000 to perhaps 35,000 of its own citizens. No one should shed any tears about the potential fall of the Iranian government. On the other hand, I was surprised that the government of Canada and other states have not simply condemned Iran, but actively supported the bombing campaign by the Trump administration. This is a high-risk effort, and notwithstanding the brutality of the Ayatollahs, there is no sense that the Trump administration has any plan for what happens after the bombs fall silent, what happens next, and whether they are going to leave Iran a less dangerous or a more dangerous place, a place where democracy has a chance, or in the alternative, where the population has become radicalized by the bombing campaign. Donald Trump himself, very famously, before he was elected president during the tenure of Barack Obama, said in a criticism of Obama that the only reason an American president would bomb Iran would be to distract Americans from his poor governance record, his inability to negotiate with the Iranian regime, and an effort to win more seats in elections. Now Donald Trump is president, and he has now bombed Iran.
Yes, it seems as though there are some similarities there. When it comes to, countries' willingness, I guess, in the future, international countries to work economically with the U.S., do you think what we're seeing play out, just in our last minute here, what we're seeing play out with the U.S., will that change anything?
I think the truth is this is likely to cause chaos in the Middle East. Pete Hegseth has said himself that there will be no democracy-building efforts in Iran, and therefore no attempt to make Iran a safer place after the bombing campaign is over. He has also said that there will be no rules of engagement. In other words, that he will wage this war without regard to the laws of war or international human rights legislation. Mm-hmm. It is a situation that is ripe to discredit the American administration, not just in the Middle East, but around the world.
Okay.
It's possible to dislike Khomeini and still think that what Donald Trump has done is a foolish thing.
Okay, sir, I'm going to have to cut you off. Akash Maharaj, really appreciate your time and your insight. Thank you so much for joining us.
Thank you.
And that wraps up this edition of Trading Day. Thanks so much for watching.